Welcome back to another episode of the Strive 25 podcast. I've got an amazing guest on today, Sally Gimon, and we're going to be talking about some new tax and CPA laws and changing in 2024. And she's with Trust As You. And Sally, thanks so much for making time for us today.
Well, thank you for having me, Joel. I appreciate it.
So if someone out there is an owner of real estate investor, owns a business,
Yes.
what do they need to know right now with some of these changes coming up?
A huge change that starts January 1st, 2024 from the Treasury Department is the Corporate Transparency Act. If you're an established LLC, doing business as, or a corporation, you'll have until January 1st of 2025 to do the paperwork. If you start a new LLC, doing business as, or a corporation, you have 30 days to do the paperwork. If you don't do the paperwork, you could be fined $10,000 or 2 years in jail or both. If you do the paperwork incorrectly, reading through it, when I started my LLC back in 2018, I worked with a law firm. They want to know the paralegal who did everything on there. If I don't have that right information, they could charge me $500 a day for doing the paperwork incorrectly. The Treasury Department's not even talking about this. They're going to announce it December 26, 2023 for a week later, and I just want everyone to know about it. I work for a law firm with the Spendthrift Trust to save federal taxes. You're shielded from doing that. But, my brother has his own brewery. He's in an LLC. He needs to know about this. And everybody else needs to know about it.
Okay. So if I own a business and it's in an LLC or real estate and it's in an LLC, so I have until 2025 to do paperwork. But what does this paperwork say or do, or what's it all about?
They're going to they want your name, your address, your driver's license, your phone number, your social security number, and your passport if you have it. They really haven't really explained anything. I have a 54-page BOL from the Financial Crimes Network that just lists everything. And I'm like, this is crazy. I mean, I'm not saying the federal government would get hacked, but this information, all this information they're collecting, it's going to be in one place. If I were, not that I am I'm technically challenged, but if I were a hacker, it'd be a perfect place to find all the information about small businesses in the United States, because they're I don't know if the Department of Treasury understands how many businesses are out there. Before I had my trust, I had 6 LLCs that I was doing my real estate through. I shut them all down, but I know some real estate investors who have 50, 60 LLCs easily.
Okay. So my stuff that I have is registered with the Secretary of State, et cetera, with each state, you would do business in, and then the IRS gets your returns, and then you're going to have EINs that are going to be on your returns for your businesses. So we're talking to the Department of Treasury, which is a different government entity. Now they want this stuff. So
correct.
Why are they doing this? What's the purpose of it? What are they gaining? They already have the information, right? So what's going on?
It's part of the 2020 Anti-Money Laundering Act. They want to make sure people are not doing things illegally. Now, here's a kicker. Banks and credit unions can report any account that looks suspicious. Are you a real estate investor?
Yeah.
I wholesale. So I got money coming in, money going out. My bank account's always fluctuating, like kind of, I like it, but it could be suspicious. The banks just have to report it to the Financial Crimes Network, which is an entity of the Treasury Department. The Financial Crimes Network will investigate. If they think it is money laundering and they seize the assets and they sell the assets on the open market, that bank who reported will make at least 35% of the profits from the seized assets for the bottom line. This is crazy. I mean, no one's talking about it. And I appreciate you having me on your show, because I want to help as many small business owners know about this. I was just on a friend of mine runs a realtor network grouping meeting. I did a presentation this morning. All of the realtors like, what are you talking about? Send me that information. So that's all I've been doing today, is sending emails.
Okay. So kind of just rewinding a little bit. So I own an LLC. I've got to the end of 2024 to submit my information to the Department of Treasury.
Exactly.
And then what? What happens after that?
You'll do it every single year.
Do it every
year. It's
year.
going to be yearly requirements. It's going to be any entity that's registered with the state, Indian reservations, and another thing. My father worked for a public health service, and Indian reservations are sovereign nations. They're going to be part of this. Again, there's a list of 19 different entities that don't have to do this. The Spendthrift Trust is number 19. So again, there's a solution, but I don't know how hard the paperwork's going to be. I haven't seen the actual documentation, but I do have, here's what they're looking for. So if in your LLC, if somebody owns at least 25% of that LLC, that has to be, all parties have to be reported. If you're in a joint venture with somebody else on a house or something like that, you guys will have to do that too.
Okay. So is this something that like a CPA would do on someone's behalf, or do you have to just know to do it on your own? Or
It's interesting. So far, I get a lot of email. Only one CPA firm has sent anything about the Corporate Transparency Act. I don't know if people know about it or don't know about it. I really don't. The law firm I work on behalf of, they did a Freedom of Information letter with the Treasury Department to get the bullet. And we had a major meeting late October to start telling people about this, because it's going to change how all kinds of small business people do their business in the United States.
okay, so the information that they have to give, you mentioned like you said social security number?
Correct. There's a whole
Or-
list of
or-
documents they're requesting from the people. Correct.
Okay. So then what does that put pressure on or open up, lanes to? So now that the Treasury has this information, which they should already have, information in theory, right? Like, so what does that mean for the business owner? Once they give it, then what happens? Like, what's the?
I'm hoping they're going to keep it secure, but you'll have to keep reporting it every year. So if I still had my 6 LLCs, I would have to do the paperwork 6 separate times for each LLC. And again, because I started the Spendthrift Trust, I got in trouble. I'll be honest. In 2019, I was working full time. I wholesaled 7 bank-owned properties. I got on a payment plan with the IRS because I had too much in capital gains. That's how I found the Spendthrift Trust. Now that I do all my real estate in my trust, I get to save capital gains, interest income, dividend income, rental income, and royalties. And so I don't have to worry about this. But again, most people don't know about the Spendthrift Trust, but they surely don't know about the 2024 Corporate Transparency Act.
Okay.
And
So
some people are calling it the CTA, which I get confused with that.
right. So the process of filing, I mean, do we know what it's going to cost? Is there a cost to file each one on top of like doing your returns?
Honestly, that's a great question. I don't know at this point. Boxing Day, or the day after Christmas, my family usually goes to lunch and we go to a movie afterwards. It's a tradition that started with my mom. She was from Ireland, but I'm going to be checking the Treasury Department's website Boxing Day.
Okay. So you mentioned the Spendthrift Trust.
Mhm.
So for people that want to know what that is and how it's beneficial, what it's for, can you explain kind of what's going on there?
Oh, I'd love to. Thank you. The Spendthrift Trust is legal, copywritten in the IRS tax code 643B. It's come from England way back when King Henry VIII, the famous king who chopped off his wives' heads, he got in trouble, so he started the Church of England. Go figure. Murder a few ladies, start a church. It's come over from England as a contract law. The law firm I work on behalf of that has a 72-year-old copyright on the trust I sell inherited a trust that turned 350 years old in 2023. I don't know if you know about this, Joel, but the US tax code was only supposed to be in effect for 6 years. It went into effect February of 1913, and the Barron families, the Rockefellers, the DuPonts, the Carnegies, and the Kennedys, put this into the Spendthrift Trust in tax code 643B, way up high. Most accountants work in the 300, 400 level, and there are over 1 million attorneys in the United States. They only get 4 hours of trust law in law school. So that's why 97% of the trusts that are sold are what my mom and dad had, and Susie Orman talks about, family trusts that just avoid probate and then they dissolve. This is not your mom and dad's trust. This is what the Rockefellers have. Their trust, it's called The Office. It's 7 generations old and has over 400 people under the same EIN or employee identification number. So it does so much good.
I mean, is there any data on how many people or entities or how many of these trusts are out there?
My law firm that I work for, again with the 72-year-old patent, the trust I sell is called the patent. We have over 700,000 clients in the United States. In the 72 years, only one trust has been examined by an IRS agent. They went down to Texas, went into the boardroom to look at it. They came out and they said it was okay, but it's never been audited. Again, the Benson Financial Trust, I'll just give you a little bit of history. Paul Benson was a Harvard law professor. He wrote up the trust. He got it copywritten. He and his partners started the law firm 72 years ago. They left it to a son of each of theirs, and now it's a grandson. So there's been a name change of the law firm, but they still have the copyright on this trust. And I mean, I don't know if you know this, when you sell a business in the United States, you're going to pay 15 or 20% on the profits of the business. So if you start at zero, what you sell it for. So October 31st, one of my clients sold a family restaurant. They built it themselves. They sold it for $3 million. We're going to save him either $460,000 April 15th, 2024 at 15%, or $600,000 April 15th, 2024. He's 69, his wife's 64. She called me in happy tears going, that changes our retirement. 6 figures, that's a lot of money to save.
Okay. So in that tangible example, so someone builds a business from scratch, it's a restaurant, they're going to sell it for 3 million. And so they have it in this trust. And what's the name? What do you call the name of the trust again?
The full name, so you have it, is irrevocable. There's 5 elements: irrevocable, complex, discretionary, non-grantor, Spendthrift Trust. There's the business trust for 1099 income earners, and then the beneficial trust for all investors. And again, when you sell a business, that's capital gains. But if he had the restaurant, making money that way, one of my clients, the husband and wife have 2 pizzerias here in the Charlotte area. They make about $15,000 a month in gross. So it's $180,000 at 70%, because Roberto's like, anything above that's icing on the cake. They're going to save almost $22,000 every single year in federal taxes. In 2024, they're going to open a 3rd pizzeria. 2025, they're going to open a 4th pizzeria. When they retire in 3035, they'll leave 2 pizzerias to 1 child, 2 pizzerias to another child, no inheritance tax, and then the kids will also save 1099 income. It's an amazing thing.
Okay, so irrevocable something Spendthrift Trust. Say it again.
Correct. So do you want me to explain the words?
Nope, just say it again.
Irrevocable, generation to generation. Irrevocable, complex, it can hold money. Discretionary, the trustee or trustees can make the rules for the beneficiaries. Non-grantor, this is very important. When you start the trust, for 10 minutes, someone who's not a beneficiary signs up for the trust as a settler, is the trustee for 10 minutes, and then signs away. If you can't find someone to do that, either myself or somebody from the law firm does this free of charge. And then the Spendthrift Trust. The Spendthrift Trust has gone in front of the United States Supreme Court 2 different occasions, and both times the Supreme Court has favored the Spendthrift Trust. So it's as legal can be.
Okay. So what's the mechanism in which you're talking about saving on taxes, on profits, and also on the sale? So what does that mean? How does that work compared to what it would do if it wasn't in this trust?
Exactly. So just my personal experience, I went from 22% tax rate up to 24% tax rate. There's 10% to 37%, 7 different layers, because I wholesaled so many properties in 1 year. With short-term capital gains, interest income, dividend income, and rental income, you're going to be taxed between 10% to 37%, whatever your tax rate is. You'll save that year after year, generation after generation. Royalties are a little bit less. It's between 10% to 35%. And then long-term capital gains are either 15 or 20%. For business owners, 1099 income, federal income taxes are also charged between 10% to 37%, 7 different ways, 4 different ways to file your taxes. I just worked with a husband and wife in California. He's a dentist, has his own practice. His wife works for a company. We lowered their tax rate because he's got the business trust. He took out all his income. They went from 35% down to 22% with just her income. And then he's going to keep his information private. He won't be sued, and he won't have to do the paperwork for the 2024 Corporate Transparency Act. They're loving it. They're going to save over $26,000 at 70% every single year, just because of it. He took his practice and put it into the business trust.
Okay. So by being in the business trust, does it mean that it shields it from certain types of taxes, or just lowers the taxes, or what's actually functionally happening?
Correct. So you're going to save at least 70% on your federal income taxes. And then this dentist in California is also going to save California income tax on his business. What his wife is doing, because she's a W-2 employee, she'll still have to pay that information, but we're going to save them so much money.
Okay. So by being in the trust, what is functionally happening to save on taxes? The trust doesn't get taxed? Is that what you're like? What's actually happening?
You're not tax free. You're still going to be paying certain taxes, but it's going to save you the business trust, 1099 income, the beneficial trust, the capital gains, interest income, dividend income, rental income, and royalty. So there's 2 different trusts. Most of my clients have one or the other. I personally have both trusts because I have 3 online businesses too.
Okay, so the dentist, right, who has a business and has employees, who's getting paid out and making money, et cetera. So how was that business? Were they like, how are they saving money in that example?
Great question. It's a new EIN, employee identification number, a new bank account. The money he makes being a dentist from there, he pays his receptionist, he pays his dental hygiene from that trust. All the money that goes through the trust will pay for his mortgage. There is a due on clause with mortgages, but as long as it's being paid, it should be pretty good. It will pay for the water bill. It'll pay for the gas bill. It'll pay for the garbage bill. Some municipalities might make them change the name. Instead of being in your name, Joel, you might have to put in the trust name. We research that's what the law firm helps you with. But all the money that goes through there, you'll have a debit card with the trust, with a new bank account, and then you can do things. Go out to dinner, buy things. With all my new clients who start, I do send them a way to start building business credit for Dun & Bradstreet. You got to buy $50 worth of light bulb, something at Granger for 3 months. You've got to get a gas card at Shell gas station, to build the business credit up. Some of my clients do have business credit on their LLCs, if they're in real estate. I explain to them that keeps them open to liability. I understand if you've got, several credit cards at 0%, to do your real estate, that's important. But I want to make sure that they're aware it keeps them open to being able to be sued, because anyone can find out about an LLC from the Secretary of State or the Corporation Commission, whoever's in charge in your state. Just send them a Freedom of Information letter. But most of my clients shut down everything within the first year very quickly because they're saving so much money.
Okay. So the trust allows you to have more expenses that allows you to
Correct.
lower your taxable income. Is that what's going on? You guys just have more expenses that you can actually use to lower the taxable income?
Exactly. So a lot of people who have rental income will take depreciation. Be my guest, keep doing that. But the liability, what if your renter's dog gets out and bites a kid? They're not going after the renter. They're going after the person who owns the house. Do you mind if I tell you a story?
Sure.
My national real estate group, I'm part of a Renatus education, 2021, go out to Sandy, Utah. The gentleman I'm sitting next to, his name's Patrick. Patrick's mad as a wet hen because the renter's dog got out, bit the mailman. The mailman hired an attorney, found 2 of his LLCs in Chicago. Patrick had 100 doors in Chicago. Two of the LLCs had 2 properties each. The mailman got paid $400,000, $100,000 from each house. Patrick is now a client of mine. This past summer in July, I have not seen his RV. I can tell you it's probably a $250,000 gorgeous RV. He couldn't slow down fast enough for traffic. He hit the car in front of him that went into the car in front of her. No one's injured, but the cars are damaged. She jumps out. She sees this beautiful RV that he has. Patrick's tastes are very expensive. The insurance card has the trust name on it because the RV's owned by the trust. His driver's license has his name on it. She hired an attorney to sue Patrick, the person, but Patrick's worth nothing. His 120 doors in his RV are in the trust. She can't get a hold of it. It became a frivolous lawsuit. The insurance on the RV that the trust pays for fixed her car and fixed the car in front of her, took care of everything. His insurance rate might have gone up. The trust is paying for it, but he didn't have to pay that lawsuit. It's an amazing thing.
Okay. So protecting assets,
Correct.
that better than what an LLC will do, because there's still going to be some type of personal connection to the LLC when all is said and done when they come after you.
Correct. Just give you a statistic. 40% of all LLCs in the United States are pierced every single year for lawsuits. So an LLC does not protect you from any lawsuit.
40% of all 40% of all lawsuits on LLCs, or 40% of LLCs out there?
But so when I had my 6 LLCs, my investing, I do notes. I'm the paper on the house. I don't own the house. I'm the mortgage on the house. So if something happened, let's say the person who's paying the mortgage several of my houses are in Ohio. And so in the wintertime, if they don't clean the sidewalk and someone trips and falls, with me having an LLC, they figure out I'm the paper on the house, they could sue me for their injuries. Now that it's in the trust, they don't even know who I am. Everything goes through the law firm in Texas.
Gotcha. Okay. So, this is a tool to, like you said before, to be anonymous in terms of
exactly
what's on public record. Okay.
Exactly.
Okay. So I'm still hoping you can clarify. So the saving on federal taxes, what's going on? Like, how is this trust saving somebody on taxes versus just a regular LLC?
Correct. Because how it's written, you will file a 1041 tax return. Your LLCs file 1040, individuals file 1040 tax returns. And again, depending on which trust you go with and how you set things up. So I just wholesaled a house October 31st. Unfortunately, they were behind on their mortgage, but I wholesaled it to an investor. On that house, because I wholesaled it, I'm going to save $8,900 in short-term capital gains April 15th, 2024, when my taxes are due because of 2023 taxes. All that money in the trust. Here's a caveat on this. I had to get the house under contract for the price I got. That's going to, it was smaller than what I sold it for. So when you have the beneficial trust, the 3 things it does not cover is your personal food, fun, and fashion. So just giving you rounded numbers. I got the house for $100,000. I sold the house for $300,000. I could do a demand letter. It's in your trust packet. I can do a demand letter for my food, fun, and fashion. I just keep the receipts, and once a month I do a demand letter and I give it to my accountant at the end of when I do my taxes. Easy peasy. My car, I'll be honest, it was brand new in 2015. It's now been hit a few times. So my car in 2015 was worth $27,500. That I could do a demand letter up to $27,500 to pay for my food, fun, and fashion. I'm with Wells Fargo. I have a red debit card and I have a blue debit card telling my 2 trusts apart. Back in September, when I went to the courthouse in Union County where I live, I didn't have my business debit card in my wallet. Crazy Sally. Go into the gas station to beneficial trust paying for the gas. Go into the gas station to do something. They had, I shouldn't tell you this story, a cake donut with chocolate icing and hundreds of thousands. What do y'all call them? Jimmy's, the colored Jimmy's on top. I didn't eat a $2 donut, but it's my favorite donut. So I paid for the donut with the wrong debit card. I had to do a demand letter for $2 stinking for a donut that I did not need to have, but it was my breakfast that day.
Okay. So the wholesale deal, right? You said it's going to allow you to save $8,000.
Correct.
So if you don't have this structured in the trust, then what percentage would it be? And then by having it in the trust, what percentage of taxes are you paying? Like, what's the difference?
Correct. If I did not have this property in Monroe, North Carolina in the trust, my tax rate, I'm going to be honest, back in 2020, my tax rate was 24%. So that's what I base everything on now. I would have to pay that $8,900 in capital gains April 15th, 2020, because I did this deal October 31st, 2019, God, I'm getting mixed up, 2023, if that makes sense.
Okay. So you would have paid, you said 24%?
Correct.
So now that it's in the trust, so instead of paying 24%, you're paying what?
Exactly. So when I got in that payment plan in 2019, my tax rate at that time was 24%.
Mm-hmm.
The first property that I put through the trust, a bank-owned reverse mortgage house, I bought it for $20,000. It was going to go to auction for $50,000. I knew that $30,000 spread. I would pay $7,100 at 24%. That was July of 2020, middle of COVID. The courthouses are shut down, auction houses are shut down. I had to wait 13 months. When it finally went to auction, it went up to over $64,000 on that first property. I made it $44,000, yay, Sally. But because it was in the trust, I saved $10,300 on that first property. And I've done 29 more wholesale deals since I started my trust September of 2020. It's an amazing thing.
Okay. So now that's in the trust, what percentage are you paying in capital gains?
I don't pay capital gains at all, but I still use just my formula of 24% because that's what I originally started at. So I have a crypto bot, Bitcoin versus Ethereum. Every time it moves, I get paid like a quarter, 10 cents. So about $40 a day on my crypto bot. I get to save the capital gains on that. It never, I started it after I started the trust. I don't have to ever pay that again. Worst case scenario, Joel, if, I don't have any kids, I have 9 nieces and nephews, so they're all beneficiaries of my trust. 5 generations from now, if whoever is the trustee shuts down the trust, says, I don't want this trust anymore, all those capital gains could come back to him, but you pay for the trust up front and it's golden for the rest of the time. So I purposely buy silver for my nieces and nephews because none of them are, all of them are W-2 employees right now.
Okay. So you're saying that because it's in the trust, you don't pay any capital gains, like period.
Exactly.
Okay. So why would somebody not want to do this?
I'll be honest, people think it's expensive. I just did my meeting this week, a monthly meeting. One of the examples I show, when I do a mastermind in my real estate group, the gentleman, retired preacher from New Hampshire, he knew about it. He knew about how much he was at 22%. He knew he was going to have to pay $11,000 on a wholesale house he did. He started Ubering 6 nights a week because he took the $50,000 he made on the wholesale deal, paid down credit cards. He got on a payment plan just like I did, had to Uber 6 nights a week. Unfortunately, his wife fell and broke her hip. He couldn't go Ubering until one of his grown children came and sat with her because she was bedridden. He now has a trust, has wholesaled 5 more houses. I don't know how much he makes or on the wholesale deals, but just to give you an idea, if he made $11,000 in capital gains 5 times, he just saved $55,000. He's paid for the trust.
Okay. So there's obviously a lot of money that goes into the legal preparation of the trust. So that's one of the barriers is just going to be the upfront cost. But once you have it done, then it's set up and it's there for however long you want to have it open in terms of you're talking generations.
Exactly. So like one of my clients who started a trust, he did a fix and flip and he sold it October 31st. He started the trust, new bank account, new EIN in October. He didn't pay for it until November 3rd when he got paid. I'll be honest, it has to be either certified check or by a wire because too many people can cancel credit cards. So the law firm won't accept credit cards. But on that wholesale deal, he's a fix and flipper in California. Again, he thinks he made over $60,000 on that deal, and he won't pay the capital gains on that deal. So he's now got
so the
more
money
capital.
goes back into the trust, then to be able to continue to operate and do more deals and whatever business.
Exactly.
Okay.
Exactly.
So you were talking about the demand letters and whatnot. So like, okay, if you got somebody who's just purely doing stuff for investment purposes, right? That's one thing. But if they're doing it to be able to live off of potentially, or need it for, paying for life, you're saying that you could use it to pay a mortgage. You can use it to pay for car maintenance or insurance on your car. You can't use it for personal use.
One of the things
you have to do categories.
is go to the DMV and change the title to the car to the trust name. So it's a little bit of paperwork.
Okay.
When I registered my car here in North Carolina, they told me I had to be there at 6 o'clock in the morning. I thought she was crazy. I was the 17th person in line to change the title of my car to the trust name. So yes. But
so like my house, that means like if you have the house in there, then you can put the utility bills in there.
Exactly. The only difference, I shouldn't even talk about this today. If you have your personal house, you won't change the title on your house until you plan to sell it, in case you want to get a HELOC, in case you want to get solar panels on your house. But again, the trust will be paying for your mortgage and things like that. And it's, it works so well.
Okay. So the people that would be wanting to kind of go down this path are people that, in terms of generating, returns on assets or, acquiring assets, real estate businesses, fix and flips, people that are actively pursuing those things. If you just have a W-2 job and a 401k, it's probably not for you.
Unfortunately, it can't. Correct. A 401k, you could cash it out when you're 59 and a half and then put the money in there. But the 401k, especially if it's a traditional, you have to pay for it. With the business trust, I suggest somebody making at least $75,000 a year to make it worthwhile. When you make an appointment with me, I take people out to NerdWallet, a free site, and just show them the formula and say, here's it at 70%. That's before deductibles. Most of my clients are up to 90 to 95%. My 2022 taxes, I saved 92%. I only paid 8% on my 3 online businesses. I mean, I was happy to pay 8%. That's super nice.
Okay. So I want to go down one more lane here. It's a little bit different. Okay. So real quick, if people have questions on this stuff, what's the best way to reach out to you and connect with you?
To make an appointment with me, it's info. To make an appointment, it's info. I just forgot it. Info at the tax thing, so they can make an appointment with me, so I can show them how to save taxes. And again, I just teach people about this because I want help as many business owners, 1099 incomers, and investors to save as much as they can.
Okay, so we'll put a link in the bio and the notes and all this, so that way people can get to you. You mentioned wholesaling and then several other lanes of income coming from online businesses. And this show's kind of all about, hey, increase income, save, and invest. That's the bottom line. So what streams of income do you have coming in?
So for me personally, for on my real estate side, I wholesale, that's capital gains. I have 12 notes, that's interest income. I now have 4 rental properties, that's rental income. My friend, I don't do options trading. I can't sleep when I do options trading. That's covered by the dividend income. Options traders, just to give you an idea, a year or less, they pay 40% of their profits. A year or more, they pay 60%. So my friend, we have an agreement there. My 3 online businesses, again, I saved 92% of my income, and I didn't file North Carolina taxes, 2022 taxes. North Carolina doesn't know I exist here.
Okay. So what are those online businesses? What type of industry or niche is that?
I do a thing called Sally Silver. I do United Financial, and then I also have the transit card. So I have set up like that way, and Excess Elite. So I have several businesses I do.
Gotcha. Okay. So you got a lot going on.
Correct. I try to make my life as easy as possible and just make money coming through as much as I can. I'll tell you a bad story. I do a thing here in North Carolina. The reason I moved here, they have what's called upset bids. My nephew, who's up in Cary, North Carolina, he's a chemistry teacher. I keep asking him to go to the courthouse just to take pictures with his cell phone and send them to me. Last October, he sent me a picture. I went up there, I put a down payment on a tax lien. We won the tax lien, I wholesaled the tax lien, and I split it with him 50-50. I sent him $6,000. He came home at Thanksgiving. He's just like, wow, that's more than I make in 3 months of being a school teacher. I'm like, go every week. That's all I'm asking you to do. He's never been back to the courthouse in Cary County. I'm just like, I love you, but I could kill you right now.
I mean, so on that tax lien, how long was the wait?
It was a tax lien. We got the tax lien. They're very inexpensive. We won it, and then we just wholesaled it as is. And the investor, we hadn't changed the locks. He looked through the windows, and he's very happy with it. I mean, we got the tax lien for under $4,000. We wholesaled it for $4,000. We wholesaled it for $16,000. That house was worth over $200,000. I mean, it was a sweet, fast deal that we did.
Wow.
My mentor in my real estate group hates that I wholesale so much, but I didn't want, it's 2.5 hours away from me. I didn't want to have a rental up there that far away, if that makes sense.
What kind of time frame because like I know some places that you put a down payment on a lien and it takes years, months to get it confirmed until whatever, like how long of a time frame until you actually can then sell it?
Here in North Carolina, there are 101 counties, and upset bid will either be 10 business days or 10 calendar days. You have to know which county you're working on. I'll tell you this story. I came out here. My brother lives in Union County, which is right next door to Mecklenburg County, where Charlotte is. Charlotte's 10 business days. When I came out Christmas of 2021, I put down I won 3 upset bids because people didn't realize the difference. And I wholesaled all 3 tax liens and made, in 2 weeks' time, I made over $40,000 from my wholesaling those tax liens.
Wow.
Beautiful. It paid for my trip.
That's awesome. That's awesome. What's their favorite resource? If somebody want to learn more about that world, what's your favorite resource that you would recommend?
I tell people, find wherever you live, find a real estate agent who likes investors. Right now, I don't know, everything here in North Carolina was on hold because of the Public Health Emergency Act. It just got lifted in May of 2023. So there's a whole bunch of houses on pre-foreclosure. They haven't gotten that final foreclosure letter in 90 days. I just say, hey, go door knock. This is how I found this house that I just wholesaled October 31st. They're in a pre-foreclosure house. They're moving to Florida. They had it on the market. Nobody would buy the house for them. We had a conversation and I found a wholesaler. Honest to God, I found it on Facebook Marketplace. They came, they looked at the house, and easy peasy. The people who were losing their house, I gave them money. I took them the U-Haul. They paid for the U-Haul to put their belongings in to move to Florida. They registered for it. I paid for it. It came out of their money. They moved and they were happy. They were happy to get out from under a huge. The wife said she was losing her hair because she wasn't sleeping at night. She didn't know what they were going to do.
Wow. That's there's They're weird times right now with, housing and prices and rates, and we can go on for hours and talking about that stuff.
Exactly.
Okay. So last thing, the website, tr.ee.com.
Correct. www.thetrustisyou.com. Correct. When
Okay.
you go out there, I send, you can get a free video sent to you to tell you about the trust. And you can set up a 30-minute tax breakthrough session with me. Just first off, learn about it. I have 3 articles from Forbes magazine I send to people talking about the trust so they know it's legal. I send 2 pages of case law. This is as legal can be.
All right. All right. So we'll have to catch back up on this down the road as more things come out, and maybe middle of the year, we'll see kind of more about what's going on. But Sally, thank you so much for making time on this Corporate Transparency Act. If you don't know about it, start researching right now. Sally Gimon, and we'll have all the show notes have some links in there as well, so you can get learned on this stuff quickly if you have a business. So
excellent. Just have people email me and I'll send them the 2 documents from the federal government so they can get more information on their own.
Beautiful. Beautiful. Well, Sally, thank you so much, and we'll talk soon.
Thank you, Joel. I appreciate it.
All right. Take care. Bye.